Alright, so top chart is the 60 minute and the daily. This is the 60 minute, that's the daily. Middle chart is the 5 minute. Bottom chart is the tapering chart, and this is the Dow futures. So on the daily, you notice that demand has come in. Alright, demand has come in on the daily chart, very important. Pulls back, makes a higher high, tests, a high volume test, but it was retested on low volume. Okay, and now it's going back towards resistance, and I think it's going to attempt to absorb, and we'll see what happens here. But the idea is demand. The key indication is that demand is here, is in the market. Second, on the let's go to the 60-minute chart. 60-minute chart. Obviously, you have 60-minute uptrend, but what I don't like is this, where you have 7,000 on this attempt to make a high, followed by 80,000 on this attempt to pull back or test. That's a lot of volume still there. So I'm not sure what's going to happen, but I would like to see some retesting here on low volume, and then have a better picture of what's going on. But this 7,000, 80,000 down is not going to be that easy, because this supply is still there. Okay, went from 43K, made a lower low on higher volume. That's not a good sign for the bulls, but it's still in an uptrend on the higher time frame and the daily, and they might just pull back, test, and then take it out. There's still supply there right now, though. 5-minute chart, where are the turning points? Turning points, well, first you have this rally, then you have another rally, and then you have a third rally, and the third rally is a very small rally, and this is known as a shortening of the thrust. First the market gets overbought on this 95-minute wave on 4,000 contracts, retests, makes a higher high in 15 minutes, 1,000 contracts. That's where you know that demand is exhausted and they're not going to go higher, or it's hard to, it's not gaining a following. That's the it. So now what happens is you have this pullback here on 20 minutes, followed by a low volume pullback. So you have this rally down rally, followed by a low volume pullback, which initiates the downtrend. Alright, but it starts from a shortening of the thrust. You have a climax, retest, shortening of the thrust, followed by a reversal, rally down, followed by a low volume pullback, which sets up this down move. Right here you have a counter trend. How does the counter trend start? It starts with, again, an SOT. You have oversold condition as identified by 85-minute down wave for drawing out 5,000 contracts. This down wave creates an oversold condition because it's going down for 85 minutes without any corrective action. Just like this rally went up, straight up, for 95 minutes without any corrective action. In either case, you create an overbought condition up there and oversold condition here, and that was retested on low volume, less time. It went from 85 minutes to 10 minutes, and from 5,000 to 1,000. Here you went from 95 minutes to 15 minutes, 4,000 to 1,000. So obviously the volume is gone. All right, you can't go 5,000 to 1,000. 1 is a 1 to 5 ratio. So it depleted, and that allowed for a temporary bounce, okay, or a counter trend to test the area. So it did that. Then it broke. When it broke, there was a signal on the lower time on the tapering chart, basically indicating there was a lot of volume here and it's trapped. How do you know? Take a look at this green bar here on this histogram. As you can clearly see, there's a lot of volume, right? But what happens? The low is broken. The low is broken. So these guys are trapped, which means the price goes back up there. They have to exit. So this is, and also understand that this is part of that morning bounce thing that they're doing here almost every day. but you have a fake rally, which is, all the price volume signals, blah blah blah. There's no way to deal with it, because no matter what indicator, what you're looking at, it's going to be bullish, because there's no way to identify bearishness in a move that is giving bullish indications when you're using price, volume, etc., etc. This is bullish. Goes from 10 minutes to 35 minutes, down 15 minutes, 20, then 20 minutes. So there's no way to technically to know. But if you see from the past, the past experience, these are the morning bounces that are being sold. Okay, so a lot of folks will try to work with their indicators and add more conditions to them. No matter what condition you add, it's still going to give you a buy signal, because price and volume for the time here is bullish. But if you understand what's being done repeatedly, you know that it's set up to fail. So this is why the mechanical approach will not work. When price and volume is there and breakouts are occurring and the entire market is going up, it's supposed to go up, and you're supposed to get a buy signal, and smart money is going to sell that buy signal. So anyway, so it goes up for 5 minutes, then breaks, and then you get that sell signal, and you know it because all that volume, and what happened? It broke. Okay, so that was the morning, I guess, morning bounce or whatever. And then it broke, and offering the trade on the retest. The retest occurred. And price went lower. And then you had the next turning point, which occurred right here. We have price go up for 20 minutes, come back down for 5 minutes. When it went up for 20 minutes, it drew out 3,000 contracts, pulled back on 5 minutes, and drew out only 1,000 contracts. That's the smallest volume in the trend. Look at this. From this counter trend break, which means this trend starts right there. You have 7,000, 5,000, 8,000, 2,000, 2,000, 1,000. See that? So supply is gone. Supply has diminished. Okay? And that initiated demand rally, 5,000 on 30 minutes, and that created the rally higher. Okay, now we're back at a resistance area. I want to see how it behaves up here, but that's the idea. All right, take care, thanks.